What's up, everybody? Welcome back to Own the Chaos. Brad here, Fat Man Zoom there, I think. And we got some good stuff for you today. Fat Man Zoom, what are we talking about?
We are talking about bargain stocks. So the Chaos Crew has spoken. We did a poll, and we are looking for 10 stocks that have huge upside. So bare minimum 25% upside, some as much as 150%. So these are the 10 we love. You want to get right into it?
Let's do it.
All right. So I'm going to kick it off. At number one, Royal Caribbean. I'm going all in right away. Cruise liners, definitely scary, but listen, these are spec stocks. These are ones that we're saying hold on to, but they're not your forever stocks. I think it's actually time to start considering your cruise liners. And I know Royal Caribbean is one that you really like. They have a really solid balance sheet. They have the least amount of debt amongst all of them.
Yeah.
I think you play the move and then you get out. But there's 68% upside to where it was from a year ago, up to $143. And currently it's sitting at about $79. So I think that's a solid push for when we reopen.
Yeah, absolutely. I mean, we've talked about how we don't like cruise lines at all. Everybody seems to flock to Norwegian and Carnival because they're the cheaper ones. There's a reason that Royal Caribbean's at $80, even as crappy as it is right now. Like it a lot. For me, the next one for me is going to be, or I guess I should say, first one for me is going to be Southwest. And this is something that I would consider buying into weakness. It's obviously moved up a little bit, but we still have a lot of upside here, and we're getting closer to pre-COVID levels. We look at this, and where Southwest was sitting was at 58.64. I think that once we start to see vaccines start to roll out and get distributed, we're going to see explosive demand for travels, particularly in domestic travel. You can get into some of the international travel ones as well. We're starting to see some people, or I think it was it United that was experimenting with international travel as far as COVID's concerned. So you can get into those if you want, but we love Southwest. The best balance sheet out of all the airlines, the best break-even load factor. Google it. I won't go into details as far as what that is, but it's a really great number for Southwest. They have the best one. So I like this one. I think there's definitely more than 25% upside. I think we see this higher than $60 a share in the next 6 to 12 months.
My number three is BP. I'm going
You're just going, Jesus Christ, man. All right. What do you got with BP?
So, oil company. And a lot of you guys, before you start freaking out, listen to me. BP to me is the one that's most aggressively trying to transition away from oil.
Yeah.
And I think they realize it. So you'll see some spikes here and there where I think people are going to try to get into oil. And I think this is a great hedge. If you're like, hey, where do I want to get into oil? We're not big fans of oil, but if you have to, I think BP's a great opportunity. I think it has 85% upside. It's sitting at 2150. If you just get half of that, you're getting 40%. That's a great return. But I want to read you something from the Wall Street Journal, an article in the Wall Street Journal regarding BP and their move towards clean energy. They're calling for a 40% reduction in oil gas production over the coming decade, greater investment in low carbon energy, and a ramp up in wind and solar power. No other major oil company has targeted such a steep decline in their main source of profit. So they realize what's going on with oil and they're transitioning away. This might be a good steal here at these levels.
Yeah. And if you want to go for a pure oil play, also like Chevron as well, that could be a good one, especially for dividend yields and stuff like that. So good points. For me, next one's going to be GE, and GE is a recovery stock play in the sense that they benefit greatly from Boeing. We've already seen Boeing take off. I bet we see some surprise orders coming in from Boeing, especially on the Chinese side of things, with Biden coming in and potentially strengthening the relationship with China. I think that definitely bodes well for something like GE. GE also has maintained a buy from a lot of the other analysts as well. And their healthcare side of things is also getting ramped up. So GE, $10 stock, tons of upside here. Looking here on the weekly chart, this was sitting at $13 pre-Rona. I think this goes higher than this. I think we could see even 100% upside to this, to $20 a share, especially if we see significant sales growth from a Boeing.
All right, number 5, Nordstrom. This actually came to me off of a bet where I was betting somebody which would have greater returns, Tesla or Nordstrom next year. And it just caused me to look into Nordstrom. And I'll be honest with you, I actually feel good about it. It's to your point about if you look at Southwest. Southwest, the theme here is we're getting best in class. And we've talked about this before. If you get best in class, when the shakeout happens, these ones should be left standing and they should be better for it. Here's what I'll say about Nordstrom. So Nordstrom is 50% upside. They had solid earnings and they showed solid e-commerce growth. And I don't think people are realizing how well they're doing in e-commerce. Not to mention, they're just an overall great company for their staff, and they're a great company for customer service experience. They do it right. I know it's not sexy, but I really like Nordstrom, and I think they're going to continue to surprise people.
That's a very interesting one. I'm not a big fan of Nordstrom. I thought their balance sheets weren't all that great, but that might have changed over the last quarter or two. So interesting stuff. For me, sticking with the retail side of things is going to be Under Armour. And this has obviously moved up over the last several weeks from $853 at its lows, and actually $637 as low as it got during the Rona, and is now up 150% from there. I think we could see another 100% from here at $1469. I actually just grabbed a starter in this today. We could see this easily get back to 1938, which is where it was at its highs but before the Rona. But that was when Under Armour was still having problems of its own. So not only was it having balance sheet issues and that sort of thing, but also the Rona comes in and just continues to obliterate it. Before all of that, it was up around $25 a share. I think we could see this on upwards of $30 a share, especially with us leading into the Santa Claus rally. We have and Under Armour is actually turned a lot of things around. They've taken advantage. I don't want to say taken advantage, but they've definitely taking advantage of the opportunities that of the Rona as far as that's concerned, and really kind of looked at their overall business again and said, okay, how can we make this better? How can we learn from the mistakes that we've made? And how can we spend a lot less money while still being able to compete? They've been able to separate themselves from Nike and the like. And I think that Under Armour is poised to have an incredible 2021.
All right. Number 7 is one that I've been holding out on everybody on. There's a few
I know what it is.
People that are in the live stream. You know what it is?
Yes.
But before we get into it, why don't you tell people about the Chaos Crew?
Yeah, so the Chaos Crew, if you guys aren't familiar with, if you hit the join button next to subscribe on this channel, or there's a link in the description as well, gives you a daily watch list from us, and also gets you private live streams and access to our public portfolio via Webull. We do a lot of other things as well within the group. It's a great place to be. Help support our channel as well. We would love to have you guys here with us. We're almost at 1,000 Chaos Crew members, and we just are blown away by that. We can't thank enough from the people who are already in. What else do we have for them at Fat Man Zoom?
So if you are one of the people that get in before we hit 1,000, we are going to be giving away 1 share of Tesla stock. So we're going to randomly raffle it off. 1 lucky Chaos Crew member will get 1 share of Tesla stock, whatever price it is, which it may be at $600 by the time we buy
it's
it.
pretty crazy.
So definitely click the join button, join the crew. If you are a part of the crew, you're already going to know what I'm going to talk about. At number 7, it's Drive Shack.
Yes.
Now, I haven't officially brought this out until now. Drive Shack is my sleeper. And listen, this is all the stocks. We're throwing fundamentals out the window. We're just looking at this as a hype move.
Yeah.
When we reopen. Drive Shack is extremely speculative, and it's one that I've had for a while and I haven't told anybody. Here's why I like it. Drive Shack, I believe, is built for reopening for hospitality. I don't like hospitality at all when you're talking about bars and restaurants.
Yeah.
But if you want to get in, I think Drive Shack's the play. Everybody's talking about Dave & Buster's. You're crazy. You're crazy.
Yep.
So Drive Shack, if you don't know what that is, it's essentially Topgolf. It has bays, it's outdoors, heated. It basically is built for social distancing, where just you and your friends, and then everybody else is at least 6 feet away. So I love it. As people want to start getting back out, Drive Shacks are going to be the first types of companies that are going to reopen. And I think people are going to be craving entertainment. This is going to be a great opportunity for them. So they feel like, okay, I can still get out, but I'm within regulations. Drive Shack has recently made some good cost-cutting moves. They sold some of their golf courses. They have a partnership with Ping. There's a lot of good moves that they're making that I think that are going to help them out for the long term. This stock has moved recently, and it's crazy volatile. You need to know about this. So definitely scale into this one. But it's made a move. It's about 160 now. But this thing could get up to $4. And I don't think it's going to be that hard to get up to $4. A lot of expansion opportunities in more cities. They're going to be a tough competitor to Topgolf. And I think they're going to do well. And I think they can both coexist. So Drive Shack, ticker symbol DS. Tell them Fat Man Zoom told you so.
I like it a lot too. I mean, you look at how Callaway has moved with its recent 100% acquisition of Topgolf, and it's just been going bananas. So this could definitely be a good sleeper once people finally catch on to Drive Shack. So that's a nice one. I like that one a lot. My next one is Ford. Now they just got downgraded today on their, I guess, inability to really catch up to GM and some of the other EV stocks. But I think this is an opportunity. And one of the big opportunities for me, I think, is that they will catch up. First of all, it's Ford. At the end of the day, they are going to catch up. They always do. There's no doubt in my mind. I have all the confidence in the world in them that they will. But they also have dividends that they have yet to have reinstated. We've already talked about the increased in demand of just car sales in general because people are moving out of the city and into the burbs. And so I think that while everybody else is chasing EVs and GM, as GM has continued to go off like a rocket, Ford now becomes the opportunity here. And I think we could definitely see Ford make a huge run. It's down around 5% today. I think we probably see a little bit more selling on that downgrade, but that would be the opportunity to buy into that weakness. I think that this comes up and we could see a really nice move out of them, especially if they reinstate that dividend. That would be huge for the company. Ford's definitely going to be a buy for me for the next 6 to 12 months.
Great call. Number 9, I've been saving one I love. The one stock I love and I'll always love. I love me some Big C. If you haven't heard, Big Commerce. I don't understand why Big Commerce isn't getting the love and attention, Brad, to be honest with you. Recently IPO'd in August and that sucker moved up. And so not even just where it touched intraday, but as far as closed, it could get up to 140.
Yeah, easy.
It had a nice little move lately. It pulled back today, and I know they had I believe they had an offering, the CEO sold shares. But there's some headwinds, but I don't think there's anything really material there. I think it's on the way back up. It's only had 2 earnings, which it beat handily, both earnings. And I just love what they do. So if you don't know what Big Commerce does, it's basically a software as a service, and it helps businesses create e-commerce platforms. And we all know how important e-commerce is. It's not going anywhere. This is a service that's needed. They have good partnerships. And I think what they do is perfect.
Yeah.
And I don't really know, maybe I guess Shopify would be a competitor, but this is more customizable. So I think that Big Commerce isn't getting attention from analysts. And I think when they pick up on it, this will go.
Yeah.
And it deserves to go, and it deserves to be above 100, but it could have 100% upside. So look into Big Commerce. It is also volatile. So look for a good entry on it, but you'll get one and you'll be happy for it.
Yeah. I just think about Jumia. Which is the African e-commerce platform. And this is basically South American. I think that this could potentially have a move like Jumia just did. And Jumia is far smaller than Big Commerce is as well. So definitely a good call there. My last one here for me is going to be Spirit AeroSystem. This is the company that builds fuselages for Boeing. We talked about Boeing and the massive moves that Boeing has had. This one lags a little bit behind, but then people actually eventually catch on. If we see any kind of strong move out of Boeing, or we said, like I mentioned earlier, any unexpected orders that for planes, as far as the 737 MAX is concerned, Spirit AeroSystems is going to continue to roll here. When the MAX stopped being produced, Spirit was being traded at $92.81 per share. If we get the stimulus through next year, which we should by the beginning of the year, I would imagine, and we start to see more orders coming in and increased demand in flights across the globe, Spirit Air System has easy 200% upside here. I think that definitely could happen over the next 6 to 12 months. It's certainly possible. Easily 100%, I think, at the very least.
Yeah, we both love that company. That's a great company. And if you're looking for something other than Boeing, I think that's a great opportunity. And I agree it has higher upside. The other thing is, we talk about airlines. I think Boeing and Spirit will move more earlier because as the airlines are starting to come back into effect, I anticipate them making orders beforehand.
Yep.
So they should move just as well, if not better, than the airlines.
Yeah, I would agree.
Good stuff, man. That's the top 10.
There we have it, guys. So if you got some value out of that list, we certainly would appreciate a thumbs up and a subscribe from you. And if you guys want to catch us on Friday, we're going to be going live on Friday. And then we also do Stock Watch Sunday on Sunday at 7:30 p.m. Eastern time. Fat Man Zoom. Anything I missed?
Yeah, I just want to thank all the Chaos crew because they voted on this video. And if you guys join the Chaos crew, we basically put up a list of videos we're thinking about posting. So you'll get to be a part of the process of choosing it. So overwhelmingly, people wanted the bargain stocks. We're going to give you what you want if you're part of the Chaos crew. So that's it, man. Happy Thanksgiving to the people.
You too, my man. Everybody take care. Have a good one.